So welcome back traders to another live stream. You're all welcome. We are currently on the gold charts, the 4-hour time frame. So we have marked out our level. These are our highs where price has been too many times and left multiple week rejection. So when we scale down to the 1-hour time frame, you can see it clearly. You can identify multiple week rejections around this area. Let me use this. Can identify multiple weak rejections around the area. So all we are waiting for is for price to push a little bit into the level for us to sell the market, because the overall momentum of the market has been moving sideways, and we identify this as a double top pattern. This is a one and the second one. So this is a double top pattern forming. So when price gets to that level, we are going to sell the market. So let's scale down to our entry. Just waiting patiently. We still need price to push a little bit deep into the level and show us sign of failing to break. Remember, we are not going to jump into a sell now. We're still waiting for price to push a little bit into this level and show us weak rejection before we can sell the market. We're just being patient because we don't know if price is going to break above the level and continue up. As I always said, we don't want to be the first in the market. You can be second or third. As long as you are making money, that's okay. So we don't want to be the first to take a sell at key levels. We need to wait for more evidence, and that's all we are doing. So as we wait, let's check on pound JPY if you have a trade there. Okay, price is pushing up. Price is bullish. So we want price to get to some of these levels for us to look for a trade. I'm not taking any buys here. It's a low probability trade. Any buy you take, because there's a key level here. Price might respect it and stop you out. So we are not taking any trade yet on pound JPY. I'm waiting for a more better opportunity or a higher probability trade. Okay. Price is pushing down, but we are not phased. Remember, before you take a trade, analyze the chart, have your plan, and wait for your plan to play out. Don't go against your trading plan. As I said, we were waiting for price to push deep into the level like this with a wick like this. Our price is not really at the key level, and that was why we didn't take that sell. So I like to wait for my plan play out to take a trade. Don't go against my plan. If I have a plan, I stick to it, and if it doesn't work out, guess what? I walk away, wait for another opportunity. But let's see what happens. Let's still wait. And if you are early to the live stream, when we did the analysis, I told you guys this is a key level we have marked from the 4-hour time frame, and this is what we identify as double top pattern This is the first top and the second top. This is a double top pattern. As long as our stop loss is above the key level, we are good for sales. But before we take a sell, we needed more evidence. And here is the evidence. You can see multiple weak rejections signifying bearish momentum around the area. So when we scale down to the 1 hour time frame, you can see it clearly. You can see multiple weak rejection when price get to the level. So right now we are just waiting for price to push a little bit into the level for us to sell the market, so that we can have a more smaller stop loss above the level and our probability of winning our trade increases dramatically. So let's wait and see. We just want price to push into this level strong and show us a reaction before we can sell the market. If you are currently on the live stream, you're welcome. If you are new to the channel, subscribe, like the video so that you get notified whenever we're having these live streams. There's a lot to be learned. It takes you a second to do that. And let's go back to our chart. Let's check on US oil if you have a trade there. So I always said always have the maximum of 2 pairs you trade. Never go trade everything. Don't go above your trading limit. Don't go around the charts looking at different pairs for trade. Choose what works for you and focus on those 2 pairs. If you don't have a trade on that pairs, you should walk away. Don't check everything and try to trade everything. It's a recipe for disaster. So let's focus on gold. Let's focus on gold for now. Let's see what happens. So right now we are just waiting for our plan to play out. Just need price to push a little bit deep into this level for us to take a sell. That's all we are waiting for. And the reason for that is to get a more smaller stop loss placement and to get more evidence of this level being a strong level. You need more evidence to sell the market. So we need price to push deep into the level strongly and show signs of failing to break. That's all we are waiting for to take a sell. Don't want to take a sell now, and price will break the level, close above and continue up, because it happens all the time, and that's not how you want to be trading. If you want to be here for the long time, this is how you need to be trading. You need patience, you need to wait. Remember, trading is 90% waiting, only 10% execution of your trade. So be patient. So on US oil, this is the level we marked where price has broken recently. This is the level here. We expect price to come back for a retest because that's how the market moves. Market moves after any push phase, we get a pullback before we can get a continuation down. That's if the trend is down, this is how the market moves. After the push phase, exhaustion, continuation. So we identify this as the push phase. As the push phase. As the push phase. We have a slight pullback here. If you scale down to the 1 hour, you can see that pullback. So this is a pullback. So this is a continuation down. This is the continuation down. So this is the exhaustion phase. Price is now exhausting, and we expect price to pull back to this level it has broken to get a continuation down. That's all we are waiting for on US oil. We are not selling the market now. If you need to sell the market, wait for price to get back to this retest area so that you can safely place your stop loss above the area. So these are high probability trades. Don't just be taking sells and buys anywhere in the market. Take your trades at key levels. It's very important. And thank you guys for the likes. Really appreciate it. Does a lot more for the channel's growth. So let's go back to gold. Gold is still consolidating around that area. I'm not phased. I'm still waiting for price to push up to some of this level for me to take a sell. That's all I'm waiting for right now. And the reason for that is so that we can get more evidence. One a bullish candle to push into this level again and give us a reaction so that we can finalize that sellers are really sitting at this level and price is not going to continue up. And the second thing is because so that we can get a more smaller stop loss, place it above the key level. That is why we are waiting for this. But if you are currently in a sell, it's still good. But you should know that your stop loss must be above the key level. Any sell you take here is your safest stop loss placement above the key level. Never place your stop loss here or here because price is likely to come back to that level. So that's the tip. And also on pound JPY, we don't have a trade yet. We identify that price is pushing up, price is bullish, we are not taking any trade yet. We want price to get back to some of these highs before we can start planning a trade, because remember any buys you take now, there's a high probability price will pull back and you get stopped out, and I don't think there's enough range. Just look at some of these highs. When price get there, you might get a reaction. So price is currently close to those levels, so the range is too small for me. and I classify this as a low probability trade. There's enough there's not enough range for me to take the trade, and that's one thing you should always be looking out for. It's not about taking the trade. Check out the range from where you are taking the trade to when you plan to take your profit or go break even. Is there enough range for you to take that trade? Because you might take the trade and there's not enough range to even go one to one, and you end up losing the account. Imagine you take a trade at key level somewhere here, you have a long range back to this highs, and this is a high probability trade. So your high probability trades are going to always come at key levels. Never take trades in the middle of nowhere. So price is doing what we want right now. Price is pushing up. Still need price to push a little bit into the level for us to sell the market. Just need a little push into this level. And the 1 hour candle remaining, I think 30 minutes before the candle close. So I want this candle to close strongly, because when the new candle opens, start pushing down, and that's how the market moves. That's what the market does all the time, every day. Once this 1 hour candle close in 30 minutes time, the new candle will open with a wick, a bearish wick, and continue down. That's why we need this candle to push up to get an entry before it closes, before the new candle opens. But patience is a virtue, so we're waiting. If you are just joining us, and if you haven't subscribed to the channel, subscribe to the channel, like the video, so that you always get notified whenever we're having this live stream. There's a lot to be learned here. Share with you tips on how to trade, or if you are taking a prop firm challenge. If you have any question, if you want to chat with me directly, check out the video description. There's a WhatsApp link. I can respond to you as soon as possible. So let's go back to the charts. Still want price to push deep into this level. I'm just waiting. Guys, you need discipline. You need discipline in Forex if you really want to make money. You don't want to be impulsive. Start getting impulsive, it's very detrimental, and you lose a lot of money. You need patience. If you have a plan, stick to it. If your plans play out, you're laughing all the way to the bank. If it doesn't, that's trading for you. So 10 minutes before this 1 hour candle close. So all we are waiting for is for this 1 hour candle to push a little bit deep into this level for us to get into the trade. Sell. Only sell at this level. You can still sell here and place your stop loss above the key level. But the stop loss range is too big for me. That's why I did not take the sell. I want price to push a little bit deep into the level for me to safely sell and place my stop loss above the key level. That's the reason why I'm waiting. You can take your sales here and your stop loss must be above the level, just like taking my trades at key levels. That's just me. That's part of my trading plan. That's why I do not take the sell right away. I'm just waiting for price to push to that level. But it's still okay to do that if you want to enter the sell. If you're joining us, like the stream, subscribe so that you get notified whenever we're having these live streams. If you have any question, you can chat me up. Check the video description. It's a WhatsApp link. You can chat me up and I'll answer to your questions as soon as possible. You can join our Telegram trading community. Check out my page. There's a link there. So on US oil, as we said, this is a level we have marked out. So we expect price to pull back for a retest, for a continuation down, for a continuation down. So that's all we are waiting for. If the pullback happens, then you can sell the market around this area. Place your stop loss above the key level. You can sell the market when price gets here and your stop loss above the key level, because remember from the 4-hour time frame, the overall trend of the market is clearly down. Price is making lower highs and lower lows. It's clearly down, and this is where price has recently broken. So we expect price to come back for a retest to get a continuation down. So if you are trading US oil, wait for price to get back to this level here before you can sell the market, because price is currently in a pullback phase, an exhaustion. So after a pullback, that's when we can get a continuation down. So this is a simple way. I don't know how you enter. You can enter with an instant execution immediately price gets to this level. That's if you are trading US oil. I trade it too, but I want to be focused on gold. I needed price to push a little bit deep into this level to take my sales. But there's no problem selling the market now, but I'm just considering the range, and part of my trading plan is I can only take trades at key levels. So that is why I did not take that sell. I need price to push into the key level like this bearish candle did. So I need price to push into the key level. I wasn't in the market at this time. I could have taken the sell. And remember, as long as your stop loss is above the key level, you have nothing to worry about. If price is going to continue down, there's no reason to break the level. So place your stop loss above the key level. Let's see what happens. Thank you for the likes. Really appreciate you guys. You are the reason why I keep doing these streams. And as I mentioned, we have a Telegram trading community. If you are interested, you can chat me up on WhatsApp. There's my WhatsApp link is in the video description. Chat me up and I'll add you to the group. There's a lot to be learned. We drop a lot of educational and Forex signals. If you're interested, you can chat me up. So pound JPY is not really doing enough. I don't think like there is enough volume in the market right now. You can see the range of the candle, the volume are just not really encouraging. So on pound JPY analysis, we said we expect price to get back to some of these highs. Let me mark it out for you guys. So we expect price to get back to some of these highs. This high, we'll mark this first. So these are some of the highs we expect price to get back to on pound JPY. So as you can see, any buys you take here, you can see the range is not enough for price get to this level, and you might get a reaction and price might turn back on you. That's why we will not take any buys. I'm just waiting for price to get to the level so that we can start planning our trades. So let's go back on gold and see what's happening. So 2 minutes before the candle close, 2 minutes before the 1 hour candle close, let's see what happens if this candle closes and a new candle opens. Let's see what happens. Remember traders, trading is a mental game. You need to understand the basic fundamentals for you to be successful in the long term. You need to understand the basic fundamental of how the market moves. This is not a matter of luck. There is a science behind it. There is a way the market moves. It repeats itself every day in the market. And that's what we are doing. We identify the patterns of previous behaviors and using it to make the analysis. We have seen this pattern many times, and that's why we are using this. It's repeating itself. So this is not something of a luck. It's not like we are gambling here. If you have that gambling mindset, you are not fit to be a trader. It's the science behind it. Just learn the basic fundamentals and you are set to make money in Forex. That's just the plain truth. So the 1 hour candle has just closed, and here's the new candle open. It has just opened. So all we want from this candle is to push up to the level for me to take a trade. So if price continue down and leave us, I think that's part of trading. When I have a plan, I stick to it. That's just me. Say I want price to push deep into this level and show a sign of failing to break the level before I can sell the market. And the second thing is I always take my trades at key levels. I always take my trade at key levels. And that was the reason why I did not take any sell at this level. I need price to get to the level before I can sell the market. I know that you need to be adaptable when it comes to trading, but I'm also disciplined enough to plan my trade and wait for it to play out. If it doesn't play out, I walk away and wait for another opportunity. Because when you are not disciplined enough to start to plan a trade and wait for it to play out, you start getting impulsive and taking trade just because you feel it's a good opportunity, and that's a sure way down. I've been there. I'm just telling you guys now. When you plan a trade, wait for it to play out. The great traders, the professional traders, wait for trade to come to them. Let me repeat myself. Professional trading, they wait for the trade to come to them. They don't chase after the market. Don't chase the market. Wait for the market to come to you. Always remember that. Trade, let me use this analogy. It's more like a hunter going into the forest to hunt down animal. The hunter doesn't just chase them. He waits for his perfect opportunity, and when the animal is in his position, that's the only time he attacks. He takes his shots. He don't just go in firing at everything he sees. He looks for a spot, waits patiently, and wait for his prey to show up. That's how trading is. You have a plan, wait for your plan to play out before you take the trade. So on US oil, we said we want price to come back to this retest area for us to sell the market. Remember, we are not buying. The overall momentum of the market is down. The overall momentum of the market is down. The trend is down. You can see from the 4-hour time frame, the trend is down, making lower high and lower lows. So we just broke this level. That was why we marked that area. I just want price to get back to the area for us to sell the market. So it's not rocket science, and that's why I keep stressing the fact, once you understand the basics, fundamental of trading, that's all you need. You don't need a lot of technical analysis. What will I call it? Indicators, instrument on your chart. And one thing, I don't know if you notice, I don't have indicators on my chart. I'm not against indicators, but what I usually do is I focus mainly on price action. That's my strategy. It's price action. I just see what the market is doing, identify the trend of the market. Is it up, down, or sideways? And I just trade with the trend. I don't go against the trend. I don't use indicators. I'm not against it. I keep stressing that fact. If you want to use indicators, that's good if it works for you, but I don't want to clutter my charts with indicators, because once you simplify trading, that's it. You are set to make money. Don't just clutter your charts with indicators, and at the end of the day, your chart is not clear and you don't even know what you are using those indicators for. Some people just use indicators to decorate their charts. They are not really serious about making money. But simplify your chart. Simplify your chart. So I think we are going down now. I think we are going down because price just made, this candle made a top wick, a bearish wick. So once this happens, price is definitely going down. Once this, this another tip for you. Once price make a bearish wick, a top wick like this, it's a higher probability price will continue down. So we are going down definitely. But price is not do what I want. It's not get back to the level. So I'm not taking the trade. But I'm not saying you can't. You can take the trade. You can see that's what's happening. You can take the trade. But my plan didn't play out, so I'm not taking that trade. Can always get into an opportunity, another opportunity, or wait for the New Year session to look for another opportunity. But I'm not taking the trade. The market do what I want. I'll take the trade. If it doesn't, I walk away. That's just as simple as it is. That's another fact. You don't need to trade all the time. Only get into high probability trades. Take your trade at key levels. That's why I keep stressing the fact of having a trading plan. If you have a trading plan, then you start focusing on being disciplined enough to stick to it. When I was first starting, I just think that maybe whenever I come to the chart, I will not close my chart until I take a trade. And I didn't know it was bad for me until I lost a lot. But doesn't mean that because you're on your chart, doesn't mean that if you're on your chart, you need to take a trade. Sometimes you can open your charts and just observe what the market is doing, what price is doing. Understand the pattern that are forming, understand how the market is moving, and when a high probability opportunity comes, you take the trade. But you don't need, just because you're on your chart, you need to take a trade. You need to change your mindset. Really change your mindset. And if you have been with me on this live stream, you understand that the minimum trade I take or the maximum trade I take per day is 2 to 3 trades per day. That's when there's a high probability trade. I take 2 to 3 trades per day. I don't exceed that, and I don't trade every day. I don't trade every day. Sometimes I come to the chart, I do the analysis for you guys, and if I don't identify any high probability trade, I don't take the trade. Stay out of the market. But I do the analysis for you guys. I tell you guys what I'm waiting for. If it doesn't play out, I stay away from the chart. Protect my capital, my equity, because I understand that all you need in a week is 2 good trades for you to be profitable in the market. If you get 1 to 3 or you 1 to 4 risks to reward per day, if you are using a good lot sizing, or if you have a good amount on your account, imagine you are trading a 100k challenge account. or you have a personal account, you have a maybe 10 15k account, and you made a 1 to 3 risk to reward on that account. Okay, let's just use the 100k account, and you made 1 to 3 risk to reward that week on that account. And if you are risking only 1% on your account, so that's 3k, $3,000 in a week. So imagine that, $3,000 in a week. How many trades do you need in a month? If you can get into 4 of those trades, that's 12,000 in a month just by taking 4 trades. So if you start thinking like that, you remove the need to trade every day and stack up positions. So that's how professional traders do. Once they get 1 to 3, 1 to 4, they walk away. Maybe they might only trade once a week. You will get there, but I'm just telling you, this is a mindset you need to cultivate to do that. I don't think there's enough volume. I need gold to do what I want so that I can take the trade before I end the live stream. Remember, we trade 1 hour the pre-London Open and 1 hour the New York session. So I'm going to still trade for 1 hour during the New York session open, and you just need price to push a little bit into the level for me to take a sell. That's all, just what I need. But the volume is not there. So thank you guys for being on the live stream. But the reason why I keep doing this, because for me, I think if 1 or 2 of you can gain value from this, that's okay for me. And that's the reason why I keep doing this, because I believe in sharing knowledge. If you have the knowledge, you share it. That's the reason why I keep doing it. Thank you for the likes, thank you for the subscriptions. And if you have any question, as I always said, check out the video description. There's a WhatsApp link. You can chat me up directly and I will get back to you as soon as possible. So we can still catch up later during the New York session open. I'm just waiting to see if this bullish move is going to get into that level for me to take the sell before I end the live stream. So this was the overnight trade I took, and I got stopped out. It was a sell stop order, and I got stopped out. Now we all have losses, we all lose trade, just being honest. But always keep your risks constant. Always keep your risks constant. You can see I use a 0.30 mini lot size, so I don't change my risks. My risk is constant. Don't indulge in the practice of when you are winning you increase your stop loss, when you are losing you double it. No, keep a constant lot sizing. fixed risks. That's what we call it. Always have a fixed risks on your account, because when you start changing your lot sizing, you're going to get into a pickle. So always have a constant lot size from the first trade you take to the last. Unless maybe, let's say you are taking a challenge, a prop firm challenge, and your first two trade was a winner, you make good profit, you make maybe, let's say, 3 to 4% on those trades. Then you can add your risks to like to 1.5. Now when you are taking a challenge, you can only risk 1%. You risk 1%, and when you are in profit, if you are 2 or 3% profit, you can increase your lot sizing to half. That's to 1.5 on each trade. So that's how you do it. If you're taking a prop firm challenge, fixed risk 1%. If you're in profit, then you can increase your risks to 1.5% on each trade. That's how you pass your challenge, prop firm challenge. So I'll be ending the stream now, and I will catch you guys later during the New Year session. We'll trade for another 1 hour later in the day. So thank you for the likes, and see you next time.